Welcome everyone, I'm Pat Mitchell. Joining me as always is Adam. Today we are going to be discussing a comment that was left on my most recent trade analysis and dissection video. It's something that is really interesting. It comes up from time to time and we're going to dissect it. I think you all are going to learn from this. Hopefully the person that this comment is from is actually listening and paying attention, because he's frequently basically making argumentative points against some of the things that I say in my videos. It'll make more sense as we go, and let's just send it. So let me fire up my screen share. Okay, so there's a comment that has been left on my most recent video where I'm discussing risk and the amount of times that we are in these trades. It's hard to argue this point, but somehow it was still argued. But before this guy freaks out and starts typing away, just listen to the video, and I'm going to start putting things into perspective for you. There's quite a few different ways I'm going to do this throughout this video. I'm going to give you examples on the chart, and I'm also going to explain a few things. So to read this, just because you're a short-term trader that trades the first move off of support resistance doesn't mean the same concept can't be applied to the second move, third move, 10th move, 100th move, etc. Every time you enter into a trade, you are exposing yourself to a level of risk. Would you agree? I would hope everyone that is listening would agree. Every time you put money into the market, you're exposing yourself to a level of risk that there are a certain amount of variables at that time of day that you can't necessarily control. So you want to get in and you want to get out. Right? This is day trading. This isn't investing. Investing, you are exposing yourself to a wider level of risk, but you're also waiting for nice low entries, buy low, sell high, typical shit like that. But on a day trading perspective, the daily chart, we're going after certain support and resistance levels if you're a technical trader and executing those trades. And when you're entering into a move that happens, and let's say it's coming into support, and it's bouncing off of that support once, twice, all the way up to the 100th time, as he stated here. It's on the same level as, and I hate using analogies like this because it kind of puts trading in the same category as gambling, but you'll understand why I'm saying it. So let's say somebody comes your way and offers you $1 million to flip a coin. Heads or tails, you pick it, right? So you flip that coin and you chose heads. You called it, flipped it, it's heads. You now receive $1 million. Now, every time you flip that coin, you're going to get an additional 10 to 15%. Let's just say, let's use a pretty standard example for a very basic average trade. Some make more, some make less, doesn't matter. It's irrelevant. So you're going to make an additional 100,000, 150,000 per flip. But if you call it wrong, you'll lose it all. Would you continue to flip? Would you flip that coin 10 times, 20 times, 30 times? You wouldn't, would you? It would be ridiculous. That would be wild, gambling, degenerate behavior. And that's essentially what's going on here. Let's go to Adam here. What are your first thoughts when you take a look at this? Because this is, the first time that you're taking a look at this comment, right? So what are your first thoughts on that?
At first look, it's a very logical statement. It makes sense, right?
True.
Support and resistance is support and resistance. But you have to stop yourself and think about things like this, because they're the kind of things we can tell ourselves and we just accept it as truth. And we just go about our day like, oh yeah, I can trade this 100 times. It's always support and resistance. But then I think a more professional mindset investigates things like this and says, wait a minute, let me really stop, hit the pause button and think about what I'm reading here or saying, as in the case of this trader. And this is making an assumption that support and resistance is the same throughout the day. And so right there, you can unpack a whole conversation as well. What is the difference between the first test of support and resistance at the onset of the day versus the 100th test of that? What happens? What could happen? And I think that's, where your experience comes into play here is, well, why would it be different?
Well, there's a lot of differences. The main difference is variables. So let's take the very first test of that level. You have an abundance of technical traders that are looking at that. As long as it's a valid, we're going to just say support. Okay. We'll go for a long on this example. So when you execute that long coming down into that level on first reaction, right, you're going to have all of those traders at the beginning of the day looking for that. That creates volume. Volume creates bounces. If you have everybody buying a certain price point, professional traders, I'm not talking fucking erratic retail nonsense. I'm talking professional traders, institutional traders. If it's a super valid level, whether it be trend, previous close, moving average, whatever it is, it will get bought. That is first reaction. Now, that first reaction can come back down and retest to confirm. So let's say you enter again a second time, which is fine. It's acceptable, right? I'm not saying to only take one trade a day. That's ridiculous. I don't do that. And certainly most people won't do that. So that second test, what are those first traders doing? They're looking to get average into that position, because professional traders will never just throw everything, and including the kitchen sink, at that position. They want to see a level of confirmation, a level of strength on that trade, right? So now the first 15 minutes have transpired. You have that same group of traders that have come in, executed that first trade. It bounces, it pulls back, it's confirming. You're going to have all of those same traders looking to buy that retest of support because they want to average in, they want a bigger position. You're also going to have a second round of traders that miss that first move. Maybe they don't take first reactions, maybe they only take confirmation trades. So it comes down into that confirmation. You execute a second time and it bounces. Every time, and I'm going to pull up the charts here actually in a second. Give me a sec, because this is going to help really put it into perspective as well. So let's say the market opens up, pushes up, right? Or market opens up and it's up here. So very first reaction, we're going to use this. We're going to open up here. This is pre-market. This is regular hours. Market opens up, dips down into the level. So this here is the very first area I was just talking about. Let's say this is a super valid support level, whatever it is, right? So you have that first group of traders executing, it bounces, it comes into a level of resistance, let's say pre-market highs, pulls back to see if it wants to confirm, or even better, it gets above and pulls back. Whatever it does, doesn't matter. This is your secondary test. You execute coming down into that level. So that's 2 rounds of traders, both professional level traders executing this trade. Now, let's say it bounces again and it fails. It bounces again and it fails. It bounces again and it fails. At what point do all of these variables, now we have variables. Let's talk about variables. Let's say that first round of traders that first entered, they entered again, they are impatient. They don't have the patience level that maybe they should. And a lot of retail traders have this. So at what point do they tell themselves inside their head, oh, it's not working, I need to get out, right? So, and you're going to have an abundance of that group of traders. Remember, we're talking variables. So we're talking of groups of people that are in this. That's ultimately what the market is. They are groups of people. People are making the market out to be something that it isn't. What they're doing is they're making it that this is just candles on the chart, and it's not. This represents human emotion and human behavior on the chart. So every time, and now, the first, let's say, half an hour goes by, at what point, if it's not going to bounce, right? If it's not going to come, how many times are you going to flip this coin? It can fail here. It can go higher here. It becomes a coin toss. Now, I'm not saying that you need to freak out and get out of that position. The proper and professional way is to enter in, add on confirmation, pay yourself on pushes, and you can save a few. That's part of the first trade. That's not like you're entering in into like 20 different separate trades, right? So he's kind of missing the point on variables.
Sorry, and real quick though, because this is so important, you just explained the mindset of a professional trader. So
Yeah.
those professional traders are going to be taking their profits professionally. So each time it comes down, you're left with a pool of less talented, experienced, disciplined traders that it's like instead of playing poker with really good poker players, you're now in the room C with all the wannabe poker players who are trying to act like poker players but have no idea what they're doing. So in a way, just like options have a decay, you can almost see like an opportunity decay happening.
Okay, hold on. I want to stop you there because let's use that poker example. Now, I'm sure a lot of you have played poker out there. Let's take Adam's example because it's a perfect example of this. When you play with professionals, you can apply strategy to your game because each and every person at that table is applying strategy. Now, they may have their own strategy, but it is still concise, it's proper, and it's professional. So when you drop down to that C-level table, what do you have? Have you ever played with friends that like don't play poker? You can't get a read on them because what they're doing is erratic. And that is what's going on. There's no strategy there. So it's hard for you to implement your strategy. Your strategy won't work if everybody else isn't following the rules. It can't.
Hmm.
It's impossible. And don't make the argument that it's like, well, you need a better strategy. Uh-uh. You're missing the point. It simply, strategy cannot work if others aren't implementing a strategy. It doesn't matter what strategy you have. All strategy follows the same rules. All strategy. It doesn't matter what your strategy is at all. It's irrelevant.
Hmm.
Strategy is strategy across the board. As time goes by, all of the traders that didn't enter properly and professionally, you're getting the pool of the wannabes.
Hmm.
Okay. You're getting the pool of the traders that don't know what the fuck they're doing at all. So when they enter into a trade, and let's say it just barely, let's say on this test here, the fifth
Yeah,
or
they're going to
sixth
get
test,
scared.
it barely cracks. They have no risk strategy in place. And there's so many of those traders in now. You have 3 or 4 tests where as soon as it cracks, it washes. They freak out because they don't have a stop strategy in place. It's one of those things that it's like you don't want to have your money in the market. And I can give a million different examples. This is just the most basic of basic examples. What this fellow is doing here with his comment is he's thinking very surface. It's a very surface way of thinking where he's not actually peeling the layers back and understanding what actually makes up markets. Well, you can't have markets without people. People make the markets. People are generally erratic by nature. If you have only 10% of people that do this professionally, right? 10% make it, and that's at a retail level. But let's just say, I don't want to hear, well, it's only 5%, it's 3%. It doesn't matter. Fuck off, it doesn't matter. When you have that only 10% of people that are in the markets that are doing this properly and professionally, as more time goes by, you have all of the dummies in these trades and it becomes erratic. There's too many variables. And that's why he's thinking very surface. It's a very surface, very, very surface way of thinking about technical support and resistance. It can't just keep testing because you have too much emotion in something that isn't running up and actually giving follow through because there's too many people that respond emotionally. How many traders stop out before they should stop out? I see it all the time in the room. And I give my members shit for doing it because don't stop out until you get stopped out. It's a very basic lesson, but it's a lesson that's hard to control due to emotion. And that's everybody in the market. It's only a very small, and this is what people don't realize. It is such a small pool of traders out there that actually trade professionally. I know everybody wants to think that they're trading professionally, but at the end of the day, when you break it down, it simply is not true. That's why the institutions crack these support levels by that much, and it freaks out. It takes out all of those stops because most traders don't have a risk strategy where they're actually implementing a certain amount of risk. So if it does wash, they don't get caught in those washes. They look for adding opportunities into a lower technical support level or their stop level, adding into the position and getting out on the retracement. It's something I cover in my videos all the time. It's variables that this fellow is missing. That's just one of the things that he's missing in this.
Mhm.
So did you want to add anything onto that?
No, I mean, there's other just things as the day goes on. I mean, you've got,
Yep.
if you're somebody who's looking for the 100th move, what happens to your own mind, right?
Yep.
We've got opportunity decay, we've got energy decay, decision fatigue sets in.
Decision
You're sitting
fatigue. That's a
there,
really
then you're
good
gonna
one to really talk about. So how many decisions are we capable of before we burn, Adam? Do you remember that statistic?
not off the top of my head.
It's not a lot though, right? It's like
No,
10
no.
decisions, something like that. It's not a lot. So decision fatigue is something that is real and it is studied, okay? You are only capable, and an average person is only capable of so many decisions before of clear decision making. Now, even the best of the best, you're going to be capable of a few more decisions, but you can't consistently make the right decision all the time because decision fatigue will basically come in. Basically, what it is having the ability to grab on to power lines, okay? And how long can you hold before
Mhm.
you break down, you freak out, you burn up, whatever. Some people will touch that and immediately jump. Some people can hold on for 5 seconds. Some people can hold on for 10, but you can't hold on for 100. It doesn't work that way.
Mhm.
Decision fatigue is real. Did you find the number at all?
Well, we make up to 35,000 decisions a day,
Yeah.
just in life. Little
Yeah.
things. What do I do? Do I do this? Do I do that?
Yeah.
Um, and what happens with decision fatigue is one of the main things is impulsivity,
Yeah.
irritability, procrastination, exhaustion. So being impulsive is one of the worst things we can do as traders. And I've experienced it when you're sitting there just looking for a trade. I want my trade,
Mhm.
and then boom, oh, why did I do that? I mean, it's just you're just walking down the wrong path of life if you're entertaining these kinds of thoughts.
See, and this is one of the things where everybody thinks that trading is technicals and strategy.
Hmm.
Strategy, technicals, all of it. It makes up this much of a professional trader. The vast majority of it is all mentality, mindset, discipline, patience, all of that. That's what it is. It's understanding how others think. And again, this fellow's thinking very like extremely surface. Because one of the big points I think I want to make about this is a guy that is watching. Remember this, okay? He is watching my videos. Let's break it down. Why would somebody come on YouTube and go to an informative and educational video, Adam?
Well, I should be learning,
Okay.
right?
They're
They should
coming
be
there to
students.
learn, right?
Hmm.
That's it. Like full stop. So
Right.
why, if you're coming in to learn, right? You're at the point where your strategy obviously has holes in it. Don't argue with me on that because it does, or you wouldn't be there. I don't go around watching YouTube videos on how to trade. I've been doing this far too long. I have my strategy. That's what I stick with, and that's it. Right? Like I'm not going around watching fucking Joe Blow teaching me how to trade. I've been doing this for a long time, over a decade. I don't do that. I am a professional trader. Professionals don't do that. Straight up. And this guy will probably make the argument, well, you can always refresh your game. Once you've reached a level of mastery in your strategy, yes, you will progress, but only you can capture those extra hurdles or those extra nuances that you can now implement and evolve your strategy. A video is not going to do that for you. Okay. So when you're watching videos on YouTube, you're there to learn. Why are you arguing? Like that right there is such wild behavior, and it comes up. It doesn't come up often. You have
Mhm.
3 types of people that watch my videos. People that appreciate it and have positive things to say. Then you just have like the dummies and the mouth breathers out there like, "Oh, it's fucking fake." Right? I've been doing this way too long. I've been posting videos for the last 8 years on YouTube and trading professionally for 11. At some point during that time, something would have come out by now, god damn it. Right? So, nonsense. And then you have people like this. This third type of person doesn't come up often, but when it does, I always make videos on it because there's lots of people that aren't at that level of like delusion where they'll actually type. They might watch it and think. So if you're not at that level of delusion, I might be able to get through to you, right? These are just things that you don't know until you've lived it. Experience takes time, right? So this is a lesson that I didn't learn, and I knew you shouldn't overtrade. That's the number one thing everybody spouts off about. Like, don't overtrade, right? You shouldn't overtrade. 10 trades, I hate to break it to any of you during a day, is overtrading. I don't care what your strategy is. Well, I'm a scalper. I don't give a shit. You're in the market 10 times. It's too much. You should know better. Okay. But what I'm talking about is the why. Why do we not take that 10th trade, 5th trade, 20th trade? Because every time you're in, there's a new set of variables that gets involved. And that took me probably, I would say 4 or 5 years to really understand. Now, I don't have a proper timeline on that. I would really have to think about it. But let's say, for the sake of argument, because it was a long time into my career before you really understand how variables work and how the market is really made up. There are these little revelations that we have along the way. And when you have someone that's willing to share these revelations that took him literally years to figure
Mhm.
out, and then you argue with it, it's wild delusional behavior. Why do people do this, Adam?
Well, I think that because they're not truly investigating truth. They're not
No.
questioning why they think the way they think. The way, if you're a student, you're learning is something you should just do automatically every day. And
Yeah.
what's being missed here is that you've answered a lot of questions that took you years to figure out that you share with us freely and publicly
Yeah.
that can basically compress time for people. Like if he
Yes.
understood the
Big time,
value
by the way.
of what it
It does
took you
compress
to,
time.
yeah.
Yeah.
So it's like you're on one edge of a canyon and you need to get to the other edge of the canyon, but you got to go down the canyon wall, risk falling, and then figure out how to get across the river down there, which is moving really fast, and then get back up to the next thing. And you're saying, hey, listen to this, and you can just literally leap over the canyon to the next
Yeah.
canyon wall. But people want to fight you on that and take the long way around. And it's like if you understood the value and the power in being so self-controlled, you can take those first 2, maybe 3 trades in the morning and walk away with money in your pocket to enjoy your life. I mean, the value of that lesson alone, is something that's shared that takes years of experience to convey to someone. You know what I mean? I would never come up with that in 20
No,
years of figuring this stuff out.
it takes a
I mean,
long
that's the
time to
gift.
figure out these little things. And once you this is the thing, because once you say it out loud, somebody will say, "Oh no, I knew that." No, you didn't though.
Right.
You might
Hmm.
think that you have, because once it's said, it's so simple, it only makes sense. And that's why people get delusional about this stuff, because it's like, well, no, I know that there's other traders in it. No, you're missing the important part. Again, you're still thinking very surface. It is about the variables. Like we can talk variables all day long, guys. Like there's
Hmm.
so many variables. One of the um exercises that I give my clients that I coach is to understand what those variables are and then come up with contingency plans. Like, let's say you take your trade entry chart and you take a look at how you entered. But let's say it banged off that level. So let's say it was something like this. You enter into that support level, you execute, it rips. All good. You pay yourself into resistance, carry along the way. Okay, perfect trade. All good. But now what I want you to do is go through that exact trade and tell me what would happen if it traded differently. So let's take another example. Exact same thing, opens up, dives right into that level. You execute, it washes. Now what do? You need these different variables so then you're always prepared for no matter what the market throws at you. This is one of the reasons why you'll see the consistency that I have, because I cover all my bases. It's part of my training that I do myself every day when I'm reviewing my trades. It's a lot of stuff that people don't see. It's the work that I'm putting in. I want to know on my trades, okay, but if it did this, what would I have done? Well, on this, let's say there's a level of support, a pre-market level. I add into that wash and then I'm out fully on the retracement. Now I'm giving you a very basic standard contingency type of play. There are other trades too where maybe there's a support level down here that's my maximum risk. Let's say it comes all the way to that. Well, what happens when it fails that on confirmation? Well, I need to get out. There's no more management that needs to happen. But there is professional level stuff that I could share with you that I would take into consideration. And I know I'm off track here, just bear with me. But because of the relationship between distance and retracement, there is no retracement yet. There are trades where I will extend my risk because of the action. It went straight down with no proper retracement. There is a relationship between distance and retracement. When you get this level of extension, you'll get a 30 to 50% retracement. It is just a matter of time. It won't happen all the time because now you need to bring in the variables of catalyst. What is happening in the market? What levels did it break? There's a million and one variables that you have to be able to go over and understand. This is the type of stuff that I'm trying to give people for free on YouTube. And then you have somebody arguing that's watching the videos. It's wild. It really is. It's truly wild. It's like, I understand what you're saying. I fully understand what you're saying about, yes, if support holds once and it's true support, it should hold 50 times, 75 times, 100 times. If you're thinking surface and linear, the market doesn't work like that. It isn't linear and it isn't surface. There are so many different types of personalities. That's why different stocks trade the way that they do. I did a video on YouTube about this probably 6 years ago, 7 years ago, maybe even 8. Might have even been my first year on YouTube where I'm talking about why stocks trade the way that they do. Tesla, for example. Tesla will trade more volatile with more up and downward swings because of the type of trader that is trading it. Tesla is a stock that is known in the momentum world. So you're going to have momentum chasers that come into that stock. That's just one example. Then you're going to have a stock like AMD. Now, this is way back in the day, like almost 10 years ago, where AMD would trade with very small range, very clean. But that level of cleanliness on the charts is your money. You're not going to make huge money on AMD back then because only institutional traders traded it. You have that institutional clarity and consistency and strategy in that stock. It trades very clean, not big gains, but very, very clean. So understanding this, I know if I want consistency, I need to trade a stock like AMD. If I'm looking for wild gains, I need to trade a stock like Tesla. What type of personality are you? Are you the gambler and degenerate? You're going to flock more so towards Tesla. If you're always thinking about risk, you would go with AMD. You're going to personalities gravitate to these different stocks. Same with Apple. Apple follows patterns as very well. Now, I'm not saying to trade patterns. Patterns don't work over time, but I'm just saying it's very clean as well. It used to be. Things have changed. There are now things that you need to evolve in your strategy to deal with all of these extra variables as time goes on. It's one of the things this guy's missing, man. What I
Well, and
wanted
that's
to write him is, in 5 years, remember this conversation and tell me if you're still around. Because the way he's going, especially with the level of ego that is involved with him right now, because again, and I say ego, it's not like your chest is puffed out. Maybe his is, but that's not what I'm talking about. I'm talking about someone that is arguing with someone with over a decade of experience that has found wild success that only a small portion of people that attempt this get. And you're going to argue with them. It's like going into a you're going for heart surgery and you have a meeting with your surgeon, and you're going to argue with that surgeon because you read a book once or you saw some documentary on the Learning Channel, and you're going to argue with them. Do you realize how fucking crazy that is? But there is a wild fucking disconnect between reality and this delusional level of life that a lot of traders live in, man. And that's what this guy is. He's delusional. He's allowing ego to take over because he wants to be right. I don't want to be right. It's not about being right. It's about what works. And people get it twisted in my videos because I come off very confident. A lot of people will say he's cocky, he's arrogant. It's not about that. I've been there. I've done that. I've done the level of work only a small fraction of people on this planet are able to do when they attempt this. So I know what works. And I'm trying, it's not cockiness and arrogance. I'm trying to plead with people to listen. I've done the work for you. Don't argue and just do what I'm telling you to do. And it might work. What you're doing right now, it might fucking work for 3 years, 5 years, 10 years. It might. But this isn't about short-term consistency. In 10 years, 15 years is still short-term consistency. Why? Because it is not eternal consistency. That's what this takes. This takes a level of 100% consistency and discipline at all times until the day you fucking die or retire, whatever comes first. That's what it takes. And that's something people don't think about. And right now, people will say, I'm coming off cocky and arrogant. No, this is just a guy that is spitting facts to somebody that doesn't want to listen. It's crazy. It's so frustrating on a level of just like turning that amplifier up to 11, right? That's how frustrating it is to see someone who's obviously struggling. And don't tell me you're not struggling there, Star of Chaos. You most definitely are. Why? Because you're here watching my fucking YouTube videos. You wouldn't be if you weren't struggling. So stop, cut the shit, and take the advice that's given to you, or else why the fuck are you here? Why? Why do people do that? It's so confusing, man. I would never in a million years argue with someone that knows his shit. Why? Because the next time I go and ask that person for advice that is a proven professional in any field, any capacity, what would happen? They'll fucking ignore you. I have people friends that have found a level of success people only dream of, man. Only dream of. And I'm able to call them anytime because they know I'm not a time waster. If I really needed advice, I can call them and I can get advice. And that's what you guys have. You guys all have access to that. I know I look like just a regular fucking Joe. Don't let those looks fool you guys. The level of free information that you're getting here is, where is it? Show me where it is elsewhere, man. Why would you argue with it? You're getting the nuances, the subtleties, why things do what they actually do. Not just the blanket statement of buy support, short resistance. You're getting the hows. That little variable, where we're talking about variables at the beginning of this video, should be a massive fucking light bulb moment for a lot of you as to why Why do you never see me take a trade past 10:30 a.m.? That first hour of the market, that's it, man. Now, yeah, sure, there's rare occasions where I'm waiting for a certain level. And he'll bring up some fucking chart that bounced off of a technical level at 2 p.m. Sure, it happens. I get it. But that is a first test. And that's what people miss. Those variables will fuck you up, man. So listen to a guy that's telling you.
That's the journey of becoming a professional trader in a nutshell. And even since the course of the time I've known you, it's seeking ways to remove variables, not add variables. The inexperienced trader thinks the more variables, the better, right? The
Yeah.
more trades, the more money, the the more, just it's always more and more and more. But if that's what's happening, it's the wrong direction. The right direction is less, less, less,
Yep.
right? Because less, less, less ultimately means less risk.
Yep.
Of course, there's going to be a balance because you can go so far less here to zero where you're not trading at all, but it's
Yeah.
about what's the bare minimum necessary to get the results we're after and stripping away everything else that is basically extra seasoning to your cooking.
Yep.
The best food is the simplest food.
Yeah.
It's which is true to what it was when it was raised or grown. The
Yep.
less tainted, the less messed with. A good chef can bring out the natural flavors, but you take an experienced chef and they're just adding a million ingredients, you just have a mess. No
Yep.
food's going to taste good that's over seasoned, overcooked, and over prepared. So
Yep.
it really is one of those kind of aha moments for me was, no, this is the other way, is less, less, and less, the bare minimum necessary to pull off a successful trade and then walk away.
Well, the only thing, and I've said this 1,000 times, and I'm sure like this isn't a new revelation that I've come up with, but it is the only thing we can control as traders. The only thing, period, full stop. The only thing we can control as traders is our risk. So we need to limit risk at all times. We need to strip the fat. Less is more. That's it.
Mm-hmm.
And if you don't understand that concept, you are very new to this and you need to zip it and you need to listen or you will blow up. And if you don't and you think I'm wrong, please continue on the way that you're doing. But please come back in 5 years, 7 years, 10 years. Well, I'll still fucking be here, man. And let's see if you are. I hope you are, because if you are, that means that you got your shit together and you listened. Like, this isn't something that's specific to my strategy. This is something that is strategy across the board. Like it has to do with every strategy. You can't get away from implementing proper risk measures. You can't. And when you're entering in 5 times, 10 times, 20 times a day, it is a risk level that is only going to catch up to you. It's like talking to a bank robber, right? That goes off and he pulls off jobs once a week. Like, he's wild, right? So once a week he's robbing a different bank. Now, granted, he may be able to get away with it for even 15 years of doing that, let's say, Adam, right? Which those odds, that would be one in the trillions if that happened. But after that 15-year, he finally gets pinched. That's what happens, man. This is a game of forever, and people miss that. They miss it because once you start scaling up and you have a large account and you keep those wild risk parameters, you're one trade away from losing it all because you're trading with obscene size with no proper risk parameters.
Well, a really smart bank robber would just put a lot of time and effort and plan one big heist.
That's right.
And they just rob one bank one time and they're set for life.
Yep.
That's the smart bank
And
robber.
it's funny, if you want to use that example, there's very few examples of unsolved, armored vehicle heists and shit like that. Like, it's very rare, right? And stuff that maybe happened in the 80s and they've never been pinched before. Why? Because they never came back. They never did it again. They never had an excuse for the cops to nab them. That's all it is. They got their money in once. They put all their chips in once. and they got the fuck out. Now, obviously in day trading, you can't just take one trade and that's it. That's not what we're saying, but you get the idea. So if this video, if this concept has went over your head, you're in trouble, man. And I want you to remember this, and I don't want it to happen. I really don't. I want everybody that comes to this channel to succeed. That's why I do what I do, but you won't. You got to remember, I have such a pool size, a sample size of traders that I've worked with. I've worked with tens of thousands of traders, over 40,000 traders at this point, probably closer to 45 to be honest. I know what's going to happen. You're not that rare and special. I've seen this act before. I've seen it. I've seen it so many times it'd make your fucking head spin, man. You're not that special. You're not that rare. I've seen it. I've seen your type. And it always ends in one way, man. Like, maybe you got another year or two left and you'll blow up. And hey, man, maybe you'll make it 5. The end result is the same because you're not thinking about risk. And there's a million other variables, so don't get stuck on just the variables I gave you. These are just a couple of examples. There are so many variables I could go over with you. So I'm going to wrap this up. Do you have any other thoughts, Adam?
No, it's, I mean, just some good stuff to think about. You know, it's a great conversation that we should all be having just about what it is we're seeing and are we testing it and investigating it.
No, sounds good, man. I'm going to wrap this up. Thanks, guys, for listening. Hopefully we got through to you there, Star of Chaos. And catch you on the next one, guys. Adios.
Thank you.